Hi everyone, my name is Alex and welcome to Prop Desk Weekly. It's March 5th, 2025 and it's super interesting times to trade and make money on the markets. As always, we're going to provide you an update on what's happening. The main part is going to take some 10 minutes and then afterwards, if you have any questions, you can just drop them. We're live right now on Twitter and we are live as well on YouTube. Even if you don't have any questions, just drop and say hello to everybody here. Drop a like as well, it's super important so we can reach out to more people. Who am I? Well, my name is Alex. I've been trading the market since 2006 and also been an analyst with many different brokers since 2009. And yeah, let's begin. Before we start though, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money, so do your own homework. Okay, what's happening? What's happening right now? What's the last news? The last news is actually down here, but we'll take that in a minute. So you are probably all fully aware about the tariffs. So now we have tariffs on Canada and Mexico. The markets were heading lower heading into this, and what we're waiting for now is for some sort of resolution, some sort of deal between Mexico and the US and Canada. We're looking for some sort of deal there that could provide some relief, because we covered this before and I've done it many times as well. If these tariffs are allowed to persist in the short term, we could have, a recession in the US. And if not, it's going to boost inflation. Core inflation could jump up with 0.6% according to Goldman Sachs as well. I've done some estimates similar to that, so I agree with what they're saying. And with inflation being sort of at 4% in the US, what's going to happen with interest rates? They're probably going to go up, not necessarily down. And that is an issue. So we can have inflation, and in worst case we have what's called stagflation, which is high inflation and low economic growth. And that's one of the reasons why I've been bullish on something like gold prices over the last couple of months. So let's see how this progresses, but that's sort of the big thing right now. We are looking for some sort of resolution. If that doesn't happen, stock indices are probably going to keep on trading to the downside, and unfortunately crypto can continue to have some weakness. Personally though, I think we're going to get something. I think we're going to bounce up a bit. What about China then? So they put tariffs on China as well. They already had 10% tariffs on China, and now they put another 10%. So you're now looking at 20% tariffs on Chinese imports. And they're also trying to force Mexico to put tariffs on things from China. Because as I mentioned on this show before, the Chinese companies, they have set up companies in Mexico, and from Mexico they are exporting to the US, because Mexico and China have a free trade agreement. Mexico and US have a free trade agreement. It's perfectly fine to do so, and I would have done the same. There is a reason why things are not being produced in places like the US and Europe. Is because unless you're producing something of really high quality, it just doesn't make economic sense. So that's why you would do cars in Mexico. You would do other things like you have like Meta, you have Netflix, Facebook, Apple, like Microsoft, like all that technology, something that has very high value is being produced in the US. So he's trying to go a little bit against the trend here, Trump. Let's see if he succeeds. With some stuff he did succeed. So there's a big chip maker, TSMC, which is the company that does all the chips for, say, NVIDIA, and they have decided to open up shop in the US. This is very important for the US because that means that if there would be war between Taiwan, where they are based, and China, then the US is not being closed out of chips. Yet, of course, moving this as well puts more risk on Taiwan. So we'll see how that plays out. But obviously, what he said there, if you open up a factory, in the US, you won't be having any tariffs. So they're doing it for their own survival, and the US as well needs it from a security perspective, and they need the jobs as well. So this is obviously great, and that's really what he wants to see. He understands, I think, that tariffs is just going to kill their own economy, and it's going to kill and hurt other economies as well. But what he wants at the end is that he wants people to open shop in the US, which means that he might need to keep those tariffs high, because there's always going to be a situation where you can move to a different part of the world. Like Europe and US used to be powerhouses. A lot of the things that were produced here was, moved to China, and then from China goes to Vietnam and then Southeast Asia. But then at one point what's going to happen, and a lot of this production is going to go to other places, say Africa, where salaries remain low. So it's just the way the capitalism work. So we'll see if he can stop this, but it is what it is. Another thing he announced, and we saw a very nice boost in crypto. And I don't know about you, but I was up massively after that because I bought a bit of Solana. And obviously, when you're up massively, you start to look at your profit and you say, oh, maybe this can go a bit higher, because I think it could go higher. But obviously the thing went all the way back down again. So it was a round trip trade for me. Obviously annoying, but trading is what it is. But yeah, a strategic cryptocurrency reserve, that's obviously bullish for crypto. Something to bear in mind. There's going to be another meeting on Friday where they're inviting a lot of key people from the industry. So you want to keep an eye on that. But overall, that's bullish for crypto. Now, as for data coming out this week so far, we have European inflation, which dropped from 2.5% to 2.4%, while core also dropped. The moderation in European inflation is allowing the central bank to cut rates, which they're probably going to do tomorrow. Now, this is the big surprise for the markets, but not really that surprising. ADP employment changed. Only 77,000 new jobs produced, lower than the 141K anticipated, and much lower than the 186K seen. We also know from February that we had US PMI services, which was not very good, and we actually have more data coming out of that in about 60 minutes, no, 40 minutes time, 50 minutes, sorry. We're going to have this data out. So this is going to be interesting, because you have market PMI data and then you have ISM services. It's two different companies doing the same thing. ISM services to some extent have much more respect, because ISM have been around since the 1950s producing these indices, whereas the other one is maybe like 20 years old. Anyway, if this is not as bad, I mean, if this holds about 50, that would be a great victory, because ISM services from, PMI services from market drop below 50. Now, realistically, there could be a negative surprise here as well. Why? Because you just had that very weak ADP figure. So high risk that this data comes out weak as well. That can again send the Euro USD up a bit and weaken the dollar. And unfortunately, it could also trigger stock markets to trade to the downside, and also crypto. As for tomorrow, the ECB should cut rates from 2.9% to 2.6%. And this is quite straightforward. It's because of almost zero growth in the euro area and ultra low inflation. In France, inflation dropped to 0.8% annually, so quite a steep drop. But things are changing fast. Now with the European, with the new government in Germany, they're looking to spend massive amounts of money on defense, but also infrastructure project. I looked at some numbers. Someone said they're gonna spend 1.2% of GDP over the next 5 years. That's a huge amount of money. And think a little bit COVID. You remember COVID when they were pumping a lot of money into the markets? It's a little bit like that. And obviously, with the help of hindsight, that could explain why the DAX 40 has just been going up and up and up and up and up. You must have seen it. I don't really trade the DAX, so I don't really follow it too much, but I do know it's just been soaring like crazy. And this, of course, explains, because there's some big changes happening in Germany, which in the long run can obviously be positive for will be positive probably for the euro area and European growth. Now, you also want to keep an eye on the unemployment claims. Much worse than expected last week, and this is a weekly figure, so we definitely want to keep an eye on that. Again, federal workers being laid off, As well, Canadians are really upset with the Americans. At least if you go on social media, they're boycotting what they can boycott. Even here in Europe, people are boycotting. We'll see how it works out. It's a tricky situation because all the economies are very connected and people are boycotting what they can boycott. And there's, of course, talks about putting tariffs on Europe as well, which, of course, would be bad as well. And what's really interesting is that Trump, he says, okay, the Americans don't buy too much agriculture products, they also buy any cars. But what he's missing out is that Europe consumes Microsoft systems, Apple iPhones, Netflix. We have as well all the Meta products with WhatsApp, Instagram. There's a few things there that the US is providing that we can't even replace properly. But that also opens up to things if the EU really wanted to go and sort of tightens the screw against the US, then it does have some options. We'll see where it goes. Non-farm payrolls as well wraps up the week. So we have quite a few things to do. Let's take a look now at the charts. So let's begin here. I just want to show you, this is the CNN Fear and Greed Index. So CNN Fear and Greed Index is actually quite good at predicting lows in stock indices. And right now we are in a situation where everybody is rather nervous. You can see it here on the timeline that we're at negative levels. Typically when we're at these low levels, it will be the bottoming in the market. Let's take a look with that in mind. Let's take a look at the Nasdaq 100. So this is the Nasdaq 100 and we are just at the 200-day moving average, okay? And I suspect, as I said before, I think there should come some sort of deal today, tomorrow, where they push back from tariffs on Canada and Mexico. Because if they continue, as I mentioned in the beginning, it's going to be really bad for US and sort of North American economic growth. Now if you look at this today, the market pushed a little bit lower with ADP, but we continue to be in a downtrend. Now there are different strategies here, but many times the best one is just to wait for these lower and lower highs to be stopped. So for example, we are here right now, right? So maybe we can allow it to go down, and then at one point there will be that. So one could either try to grab the break, maybe here, alternatively buy the dip. There is a final one which is not that bad but super high risk. It literally would be buying here somewhere, buying around these levels, but it with stops just below 19,921. And it's the same situation here with crypto. So last week we said a break to the downside here could take you lower. I said around 73 per this big pattern here. We did go lower, so if you did short, even if we didn't go all the way down to the TP, you would have had a very good risk to reward ratio. Now there's many reasons why I think this probably did bottom out or will bottom out quite soon. Firstly, the Fear and Greed Index for crypto was a rock bottom when we were here. We were at the 200-day moving average as well. This pattern was almost complete, and then you have these big levels here. And back then I said that the US is going to introduce something over the next sort of 150 days, and it actually happened much quicker than expected with the announcement of the tariffs. So here you have as well a downtrend, and it's definitely a bit tricky because if the non-farm payrolls comes out really bad on Friday, and as well if we don't have any relief, so there's no end of the trade war between Canada and Mexico, then this could push to the downside. But you know what, I'm actually leaning towards this actually pushing up a bit. That's what I think. And technically here from a very short-term point of view, again we're still bearish below here, but I suspect that just give this a bit of time, hopefully it will compress, and then maybe we'll have that. So maybe we're not going to work with this one, rather we're going to work with the lower high. The alternative is just to buy here. Just to give you some background what I did last week. So last week I actually bought down here in Solana, The reason why I bought there in Solana is because I thought Bitcoin was about to bottom out, and as well the market was sort of just above these key levels. So from a risk to reward ratio, you know, it was an amazing setup. So I was looking at something like this. So they're risking about 12, I think it was even less, I think 10% or something like this, and then to go to the upside. But then of course you have those news and everybody was just pushing to the upside, and I made some very good returns. But then I got a bit greedy. I don't regret it, but obviously I kept the position open because I thought, all right, we're gonna go to, you know, 260 or something like this. Not in one go, of course, but yeah, it is what it is. And I'm looking at this today and I still think it makes a lot of sense, you know. Stock indices are at rock bottom, and here potentially one could be bullish, because I still think this, well, it's not about me thinking really, this is an uptrend, right? And we're above the trend defining level, so that's it, nothing more to it than that. How about Euro USD? Okay, so this is Euro USD. So I have been bearish here, very successfully so. It was bearish from here and bearish from the election, and I'll be looking for this to head to the downside. But what happened over the last couple of days is that people have been pricing in 3 rate cuts in the US from just 1, and people are more worried about inflation. People are more worried about economic contraction and recession in the US than they're worried about inflation. So then you had a break here. This is a classic ascending triangle. Very easily buy here, stop here for this to go to the upside. Of course, we're very close to the TP now, and tomorrow is going to be the ECB rate meeting, so they're probably going to cut. And if a situation that they know from payrolls is really strong, and if as well we have a deal between so no more trade wars, I think this could probably see a bit of profit taking. So this is probably a very good idea to get out and just enjoy the profit and give it a day or two. If you believe that this is going to head to the upside, then I would focus on 105.96. We are still in an uptrend, so I still think we're going to go up, but I would look for a dip, sort of 106.50 all the way down to 106, dip and then up, and then we'll see if it wants to go much higher. Gold prices. So this is gold. So don't remember exactly what I shared with you last week, but I can share this, what I'm looking at right now here in terms of gold. And I think that we did bottom out here, and we are looking to head a little bit lower now. I would probably be bullish, but from slightly lower levels, given the information we have today. It is a bit tricky, and it's definitely a bit more harder than it has been recently. And the reason why it's been like this is because we had this very strong push where we were bullish from the break here. This was easy trading to the upside, but now what's happening is that more and more people are figuring it out that gold is, you know, a good investment. And there was a lot of talk about gold and Fort Knox being audited. So now we're seeing some profit taking here. I don't necessarily think it's going to mean the end for the trend. I think we're just in sort of, we are here and the market is sort of here somewhere, and maybe it wants to correct, I suspect, trade sideways and then push upside. So I think again up, maybe down. Let's see if this holds and goes up, or if it needs to have a little bit of a correction and then go up. But I still think upwards is the least part of resistance. And before I forget, this is Brent crude. So last week we said look to sell here for this to go down. Sorry, so I'll take that back. So Wednesday. Yes, so we did the presentation here. I'm a little bit confused now. Yes, I think we did the presentation when we were here. We said for this to go up, short sell, to this to go down. It did go down. We've been bearish here for quite a while, and I think as long as we trade about below 71.23, I think people are gonna sell. What you're looking at here is this is pushing down, so realistically it's gonna go a bit lower today, and I think we would need to probably adjust this a bit, maybe something like this, and can probably lower the trend defining level. But yeah, definitely bearish, that's what I would argue. The P stocks are on the way. OPEC is going ahead and introducing more production or more oil on the market, and the US is already looking into potentially lightening sanctions on Russia. So more oil on the market, oil lower prices, as well lower economic growth, which is the path. Right now we're on that path, okay? Because of the trade wars, it's also lowering demand and prices here. Okay, let's see if you have any questions. If not, we are going to wrap up. It's going to jump on Think Capital's okay, so I'm on the I'll go through the Twitter first. If the US cycle introduces further trade restrictions, how should traders position themselves? If that would happen, say trade wars against Europe at the same time, then I would argue that Nasdaq 100 is going to go much lower. I think at one point maybe down to maybe 18,000 or something like this. That would make a lot of sense. S&P 500 as well. You know, we can have more of a sell-off. From a purely technical perspective here as well, this has been pushing up and up and up, and we lost quite a lot of momentum. And at one point we just need a bit of a correction. Are we going to have this, a big sell-off? If the trade wars persist for a long time, then yeah, maybe 27% or so. That would take you, well, take you all the way down here. But say at least here, 17% slide. The big problem here, and the S&P and also in the Nasdaq 100, is that from a short-term technical perspective, this is oversold. So you don't necessarily want to sell into this here. You could possibly, you know, you can work with this one here. So you could possibly maybe short sell higher up, I would say, up here. But I suspect what's going to happen again, Trump does not want to have trade wars, I mean, on all fronts. So I think he will try to sort out the issues he have with his neighbors first, and then keep tariffs on Europe, and then add tariffs on Europe, and add tariffs on, well, the Chinese tariffs are there. I don't think they're going to remove them. Waiting for a goal to make a setup. Yeah, so I think so everybody has their own point of view on sort of how to trade. So I've been trading for a very, 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 very long time. So I'm more keen on trading at the right levels, if that makes sense. Obviously, I think when I was younger, I wanted to make a lot of profits. I was day trading in and out a lot. But then at one point I said, oh, I'm winning a lot certain months, and then I'm losing a lot certain months, and I can't bother with the emotional ups and downs. So I'm personally focused on the bigger levels, okay? I noticed with myself that the bigger levels are more important, and also gives me much more relief. I don't have to like be too in and out. So I am personally, if I would buy gold, I would buy it a little bit lower. I wouldn't buy it here because we're sort of in the middle of the range, if that makes sense. So I would rather buy it slightly lower rather than here, because if we can go down, you might get stopped out and then it's over. Again, we're in the middle of the range. But that's just my point of view. What you guys want to do is up to you. But in my case, I'm staying out until it drops more. So Warren Buffett says, I'm struggling to find lower time frame entries, man. Please help. So it is a challenge, of course. Keep a journal, guys. Keep a journal. It's very simple. You just grab a print screen, and then you do before you open when you open the position, and then next to it, it could be in Word or Google Docs. Then you publish what happened. Do that for 30 trades or so, and then you go back and then you review everything you did, and then go back to the charts, use that to optimize. I've done that myself because I have so many years of trading experience. And all I can say is, if you really just want to win, if you really just want to make money, then what you're looking for breakouts from bigger time frame, okay? So for example, one of the most recent good trade ideas that I shared with you guys here was the break here. So breach here would take you up, which I said here. So for example, I didn't mess here. Like, I would have traded this bit here, okay? Now, when you are going from one point to another like this, it is actually easier. So in these moments, it's easier to find short-term entries as well. So you could, number one, focus on big picture breakouts like this, and there's a couple of them in every market every year. And if you want to find lower time frame entries, I still think this is super important. If you find yourself here, then the short-term stuff is going to be even more easier. How can someone start their trading beginner journey if it's a beginner in trading? My experience at that time is just, you just want to read up, read many books, and check out many sort of videos on YouTube. Back when I started, I know I don't look that old, but I started in 2006. Back then it was just books. Yes, I'm from the time of the Flintstones. No, but yeah, as you can understand, it was mostly books. But what's interesting is that what they teach you online is also still what's in books. But long story short, you just read and study a lot. And then what you will notice is that, oh, I read about this before, and I read about that before. So you're gonna go a loop when you have learned everything there is to learn about indicators and everything. And then literally you just need to start to practice. Try to find, so to become a successful trader, you need to have a complete trading system. That is, you need to know when to buy, and you need to know where to take profits, and you need to know when to take losses, okay? So you need to have a system that gives you a good indication of all these three. It's never gonna be perfect. It's a system that if you trade 100 times, is gonna be the optimal one, okay? And then this is just one bit. You know what this most challenging bit is when to apply this, okay? That's sort of the fourth leg, I would say. And that's something that comes with experience, where you trust your system, you know yourself. I know myself. I know when I can trade, and I know when I should not trade. That's the most challenging bit into becoming a consistent trader, because everybody can be like, oh, 30, 40, sometimes even 100% in a very short period of time. But try to do that over many years is much more difficult. How many pairs will you see daily? So these are the markets I'm looking at. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. I would say 17 markets every day. There's something called intermarket analysis. And intermarket analysis says that all the markets are connected, and you can get clues and sort of learn by watching what one thing is doing. You can get an indication what something else is going to do. So you can get signals. For example, from the Nasdaq 100, we can actually see that it's oversold. You can look at the candles that are really struggling to trade to the downside despite the bad data we've seen today. So you can use this information to, for example, pull a trade in Bitcoin or in Solana or something else. So you can use all this, and it might be overwhelming, but just do the analysis. You don't even have to trade every day. Just do the analysis. Create your account with TradingView and Think Capital. Just do the analysis every day, and just see what happens. Because the problem with trading is that it's not like a linear relationship. If I want to build a house and I need cement, I need to buy the cement powder, and I guess I need to mix it with water, right? And I need to follow certain quantities. It's very easy. Just follow the instructions, and then you're done. Okay. But it's not like this in trading, because the rules are non-linear, which means that something that applies today in one way can switch and apply differently in another way. And because it's a non-linear relationship, it's very difficult to just take my information and give it to you. Rather, what I can do is I can give you what I know, and you can read up what other people are saying, but then you need to do your own homework. It's a little bit like cycling. You can't read how to cycle. You just need to get on the bike, you fall off a couple of times, and then you learn it. Of course, it's much challenging trading though, because you get sucked into it, and sometimes you think, oh, I cracked the code. I mean, I thought I cracked the code when I started trading in the beginning, because I opened a real account and I made about a 40% return in the first 2-3 months. And you know what happens when you do that kind of returns? You start to say, okay, if I do 40% now, and I do 40% next, and I do 40% next, and I'll be a millionaire, this time next year. you get what I'm saying, right? So that is a challenge that sometimes will get you, because you had a very nice success rate, but sometimes it's just pure luck. Okay, and if you keep a journal, you will be able to see what's luck and not luck. So a channel, like a journal example, is super easy. Look, you just do like this. Just go to Word. So you just go to Word like this, and let's copy this, copy image. So just as a simple thing, it would be like this, and then you write buying your USD because blah 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 blah. Okay, and then you just do like this, and then here you be like 2 days later, 2 hours later, whatever it is, you push this out. I was stopped out, blah blah blah, and then you paste the thing, and make sure you save all the dates, because then what happens when you have collected enough data, you can see how are my entries. Am I getting in too early? Am I getting out too late? Or so and so. And when you have this information, you can then start to tweak and work on your strategy. So it's simple like this. I think I personally like to do like this as well. I would just add a table, and then you add one chart here, the other one here. You would just need to format it a bit. I think on the page, on the design, on the layout, I think on the layout, just change orientation to landscape. And then you just keep track of things like this. It's simple as that. There's a lot of this. You have my FX book, for example, as well, and other places where you can connect your MetaTrader 4 and MetaTrader 5 accounts. That gives you a bit more data. But I never seen the value of that. If you're a technical trader, then you need to watch the charts. So it's by just looking at the charts, you get all the information you need. Can someone suggest which session is the best if you do a 9 to 5? So if someone is doing the 9 to 5, of course, depends on which time zone you're in, right? So just so you are aware, say from 6 o'clock London time until 6 o'clock in the morning until sort of 5 p.m., 6 p.m. So you have maybe like a 12-hour window there where we are in what we call the European trading session. During that period, you'll have volatile markets, okay? So a lot of people work on the smaller time frames that look for breakouts, or they look to go with the trend. Because what usually happens is that the market is trading sideways. Like look here, very, very quiet, and then Europe opens. The market decided here at 6, this is London hours. At London, 6 a.m., the market decided, 7 a.m., it decided that it was going to be bullish. And then the trend that you see there will continue to be bullish for most of the day. And then when the US opens, which is going to happen, and well, it's happening now, the market needs to decide if it's going to peak and have a bit of a retracement. So during European hours, going for a breakout strategy, so going with the trend or buying on a dip on the trend is usually recommended. And if you're trading outside of these hours, then you're dealing with range bound markets, and I'm not an expert on that because I never really bothered to do that, but you could maybe look, like, it depends on where you are in the world, but if you are looking to trade around these hours, maybe look into traders based in the US. I'm sure there's people there that publish content online. You can also look at traders that trade the Asian hours, because they trade a little bit different, and you can maybe learn a couple of strategies from them. Trump ruins the crypto market. Yeah, it could be. I hope not. I hope not. Okay, I need to jump into the YouTube Think Capital. Lots of questions today on Twitter. I love that. Let me see if I can just find YouTube Think Capital. Okay. Nasdaq 100 is looking downwards. Yes. Do you use DYDX for information? So if anybody's new, DYDX is the US dollar index, and you can use it. You can definitely use it. I don't look too much into it, but you could use it. So what we're looking at here on this daily chart is the market heading back into its old range, and when that happens, usually it tries to test the other side of the range. So yeah, you can definitely use it because it's a combination. Thank you so much, Kaif. How long and many years? Yeah, so I've been doing this since 2006. So from 2006 November-ish, I started trading. John says, yeah, the bigger levels make bigger wins. Yes, you're right. So look, I know a lot of you doing prop trading and you have limitations on what you can do. So, you know, go for it. Do your best. I tried to trade short term for many years, but just for me mentally, I don't enjoy the ups and downs. Okay, I don't like that. So for me, I prefer, you know, go long, get a good entry, and then as long as the position is making money for me, I don't stress too much. I just relax. And many times, like a majority of the time, I get stopped out sort of back at break even, or I get like a gigantic win. And that gigantic win is going to cover for many losses. And then, you know, what I do as well is that when things are correlated, just to give you an idea, in Bitcoin and in crypto in general, I trade a lot of crypto, of course. Crypto is like stock markets on steroids. That's it. Like, it's like trading the Nasdaq 100 but more aggressively. So, you know, when things were just going crazy up, I just look at correlated assets. I know Bitcoin is going to head higher. Let's use the most recent example. So in November, on the election, I bought Bitcoin sort of around 69K. And then it started to break upside. And then you start to see a bunch of other coins also breaking the upside. So I just buy on new entries in other markets. So before you know it, I had like 4 positions open. And some of them did like more than 100%. And a few of them did like 50-60%. And then you close with some profit, and then it started to go up again. I was trying to make money on this going up, but it didn't, so I started to lose. I even tried to go short here, that didn't help. And then here it started to be very clear to me that it was very choppy. So that's where I said the fourth thing that you need to learn is when to use your system and when not to use it. So in my case, I was like, okay, this is not working out for me. I'm just losing money. So I just relaxed, sat on my hands. I didn't trade for a couple of, it's not too many days. Let me see here. So a month, 25 days. And then in Solana, as I just mentioned to you guys, I bought here, and then the whole thing went down, and I closed out for a bit of profit. The profit was there to cover for other losses because I bought other stuff as well. And now I still think we're gonna go up, but obviously it's not like a terrific opportunity. I mean, you don't have to journal forever, so I don't journal anymore because since 2014 I'm profitable. So I don't journal anymore because I have confidence in my system, and I have been part of so many cycles in crypto and in other markets, so I know what to do. So at one point, after you stop journaling, you don't have to journal anymore. It's good to have the journal because then you can go back and then you can sort of see what you've done. Question here: how can you consider a fake out from a breakout? Okay, so I can tell you what is a good breakout. So there's a guy called Peter Brandt, which has been trading for about 30 years. Or that's what he says. I think even more. He had like a break at one point, but he only trades pattern that are, I think, at least 3 months old. I think that's a little bit too long for me. And in particular, like in crypto, when cryptos is really bullish, I trade patterns that could be maybe like 1 week old. So what would happen, the general thing is that but let it mature, the pattern. So this pattern in EURUSD, for example, was 36 days old. So if you let the pattern mature a little bit more, then you would usually have a higher success rate. Versus if you're trying to, let me show you an example. So I know a guy, he was looking in GBP/USD, and he was looking at this here, and he drew a trend line like that, and he said, if we break above here, we're gonna go up. And we did go up, but sorry, he bought here, but then it went all the way down, he got stopped out, and then he moved up. So obviously this firstly is a trend line. I don't really like trend lines like that. I like horizontal trend lines, but this is obviously a very small, wee, tiny pattern, and because of this, it has less significance. So if you let the pattern mature a bit longer, then you will have higher success rate. And then you may say, but if I wait for just good setups, then I will never trade. And yeah, so what's the trick then? The trick is this: you need to look through everything. So you scan the markets, okay? I don't see nothing here. Here, look at this one. Not too bad. What's going on here? So you have low and a low, okay? You got yourself a double bottom like this. What else do we know? We know that Trump thinks that the Japanese are manipulating their exchange rate. Okay, he thinks their exchange rate is too strong. What more? And they want to avoid tariffs. Number two, wage growth is really high in Japan, and they have been raising interest rates. So here you would possibly look to sell. Obviously, this is like a 99% drop. So this is gonna take months, but if we do establish ourselves below here, maybe we're gonna go to 145.92, and then maybe down here. So this is okay, and also look, it's quite nice, like relatively old pattern. So here you need to just sort of figure out how to work with this thing here, optimize an entry. Last week we talked about euro Was it Euro Aussie? And I think we talked as well about Euro. I think as well we talked about Euro. Well, it was Euro. We were just selling Aussie dollar. That's what we did. Because as well, like in Australia, they cut rates, and New Zealand they cut rates. So here, for example, you have a very nice healthy uptrend. From a breakout perspective, it's a bit too late now, but yeah, you will literally just go through everything, looking for different patterns. And then later, when you have more experience, you can sometimes override the technicals. When you take a fundamental and combine it with the technicals, you can override the technicals to some extent. Okay, let's see if there's any more questions, otherwise I need to wrap up. So we got a question, which indicator do I use in Forex markets? I like to focus on support and resistance and patterns. If you want to make it super simple, learn to identify rectangles, head and shoulders, bullish and bearish, and ascending and descending triangles. So those are 6 patterns. If you just find those 6 patterns, that's all you need to do. And then you just learn how to trade them. And then understand as well when they work and don't work. But that's the problem, guys. It's a huge problem. Because sometimes you go up and up and up and you make a lot of money, and then you start to lose. Like this breakout didn't work. This breakdown didn't work. So you got a couple of false ones. So when trading a breakout, for example, you have the entry. And then you want that to quickly go into profit. So that's what we have, what we call time stops. So time stops is when you expect something to happen within a couple of hours, so maximum 1 day, and if it doesn't happen, you just close the position. So for example, sometimes when you go with the time stop, you can get out before you lose the whole position, the whole risk amount. But unfortunately, there's nothing here. Like always when you trade a strong trend, it goes and goes and goes, and then it stops working. So what's going to happen is that you're going to see it in your equity curve. So your equity curve is going to be going up exactly like a trend. And then at one point you're going to be like, oh, I'm losing a bit. And then you'll be like, oh, listen, I'm trading sideways, say my equity, or I'm in a downtrend. And then what happens is that you try to get in it again. But you just need to know how to stop before you go down here, okay? You will know it comes. Don't worry about it. All right, I thank you so much for your time here. Guys, before you leave, everyone, just hit that like button, and I'll see you same time next week. Thank you everybody here on the YouTube channel, and as well on the Twitter channel that we have. Have a successful trading week, and I'll see you